So the Bears probably had their fill of humble pie for quite some time. And now the question is, are the Bulls about to start eating some humble pie? The market this week was a very interesting one this week, guys. Happy Sunday afternoon or morning, depending when you're watching this. And I hope you guys are having a wonderful start to your week. This is going to be an interesting one. We're going to be talking about, is the market getting ready to turn? Are we getting ready to start a correction possibly? I did mention in the last video that we may be heading for a correction, and it basically looks like we're setting up the keys to it. That doesn't necessarily mean go short the market right now. Let's take a look at the levels you got to pay attention to as always. And let's just talk about, for a quick recap, what happened this week. Well, first of all, the NASDAQ closed at the low of the week. That's actually bad. We made a lower low on the week. However, we did not close there. So there's some more warning signs out there. We did not make a new higher high, but we also have a failed breakdown. So it's tomato, tomato there. But I'm looking at one thing. One thing that stands out to me, and maybe you guys can point this out as well, is look at the amount of red volume, amount of selling red volume. We've had more red days recently than green days. Now, the flip side of it is that you really haven't moved the stock price much. However, the bullish moves have been pretty drastic up, and the bearish move have also been drastically up. What catalyzed all of this? Well, simply, guys put, it was CPI and PPI. I think CPI came in better than everyone thought. Well, really, for the Bears, it was fantastic. For the Bulls, they kind of shrugged it off. The reaction was not something that I was expecting based on these numbers, seeing how the year over year ticked up and the core ticked up from expectations, but ticked down from the previous. And I'm like, okay, so you went down 0.1. That still plays into the narrative that the rate of inflation is not coming down fast enough for the Fed. Therefore, you're not going to get the rate cut in June. And the question is, how long is the Fed going to hold rates? How long are they going to hold your head underwater before this actually starts going down? Because this is being very resilient around that 3% mark. And also, we don't have any of the bank term funding program anymore. So all the banks are now 40% underwater on their assets. And we're back to square one in March of last year, where we saw massive culling in the banking sector, a lot of fear in the banking sector, but we really haven't seen that come to fruition. We're going to be talking about the reverse repo as always and some of the implications that we're seeing there. And we're going to talk about the yield curve. We're going to talk about the levels for the week. Again, it is FOMC week, so all this could disappear. All this bearishness could disappear within a matter of days. We could see Powell come out, say, no, we think we're okay, and then the market could run. So as always, guys, make sure you hit the subscribe button and have bell notifications on. We do live stream the FOMC, so make sure you guys check in for that and have the bell notification on for that. Along with, if you would not mind, hitting the like button, it lets YouTube know that you like this video and pushes it out to more people so the info can get out. We don't push a course. We don't push any stocks on you. We just give you the stocks that you want, really, the levels for the S&P and NASDAQ every single week. And all we ask in return is hit that like button. So diving back into this, PPI. Well, it smoked everyone, ticking up on all metrics. There was no green here or no hope for anyone. On top of retail sales, core retail sales going down. So retail sales are going down as inflation is going up. That is not the story the Fed wants to play. They want you to say goods are being transacted more and prices are going down. That's what the Fed wants to see. They got none of it. Retail sales previously got revised down from a negative 0.8 to negative 1.1. So literally any bullishness that was there got eliminated completely. And that was on month on run year over year for February, right? Because again, seasonality implicated there. They revised the previous year over year number lower. Again, they do this a lot where they come out with a better number and then the preceding month they go to revise it down and no one pays attention to the revision. So it's like job numbers. Hey, we got 1 million jobs and then revise it down to 250,000 a couple months later, but hush, hush, no one saw that. So it's just one of those how it's going to be. However, like I always say, do not trade the macro, trade the chart. And what is the chart telling us? Well, I want to sidetrack for a second. because the same way that I say NASDAQ is the SPY leads the NASDAQ leads the SPY, NVIDIA also leads the NASDAQ. And if we look here, we have lost our angle of ascent. I basically said when we were back here, it's very reminiscent of the pattern that we had back here where we pushed green and then kind of sold off a little bit and pushed again. We do have that similar pattern. However, here we didn't necessarily lose our angle of ascent that we were having. And with this, it gives me a little bit of concern. Now, 1, 2, 3, like similarly here, we have the 4 candles kind of sideways bull flag configuration. We could have that here. However, the move was higher previously. So you were above the entire time the previous high. So we have lost that angle of ascent. Where does that come down? Well, we could be looking at a correction in NVIDIA of about 10%. 10% would be a mild correction. It would not be anything drastic. We would come back to the previous angle of ascent that basically comes back to when we pushed off from the 473 starting this massive run. So NVIDIA coming back down there, the 50 quickly turning up, that would basically signify bullishness or consolidation. So is the market basically going to go through a mild correction now? And are you ready for that? Are you ready to buy that dip if you're bullish? Are you ready to scream bloody murder if you're a bear out there saying the end is here when it doesn't actually come to fruition? Or maybe it does, right? So don't play your emotions and play the chart, right? So the chart right now is saying either consolidation sideways or downturn coming. If we look at some of the other big names like Apple, right? Apple just going sideways here, Microsoft being very weak, Amazon, Netflix, they're all looking weaker, not really super strong. You got Goog that pushed up, bounced off this 50 and has come back down lower. So again, not really seeing massive amount of strength out there, but we're also not seeing massive amount of weakness, right? So if we look at RSP, some of the other leading indicators, well, RSP is below its all-time high, however, rotating back up slowly. So we have to see, does this thing start breaking 164 again, or are we just gonna go sideways? RSP would be a good indicator of that. NASDAQ actually breaking, or sorry, not NASDAQ. IWM breaking down from the previous week, closing on a weekly lower low. So we got some warning signs here. However, it does not matter what these smaller indexes do. We're mainly focused on the S&P and the NASDAQ. So let me quickly reset the levels for you guys and we'll start talking about them. So looking at the levels for this week, 505.12 is going to be the rotationary period where we look to go more bearish. Now, we do have a gap on the S&P right here, starting around the 512 area and rotating all the way up to 515. That was the gap we established Thursday into Friday on that big selling volume. So the S&P is going to be kind of your lagging indicator this week. I think when we talk about the NASDAQ, you're going to see which one's going to be your leading indicator for this week. So looking at this, we have a lot of room to the upside. However, our range is pretty established around that 9-day moving average, sitting at $512.47. Any transaction of price above that and or close will indicate a possible bullish rotation to the upside. And then you have your 517.39 level waiting for that breakout and the resistance around 518.22. So we have to see. I don't think we're going to get that bullish rotation into Powell. I think you could get it post Powell on Wednesday. However, we will cover the pre-Powell meeting so you guys have those levels that you basically will know, hey, what's going to happen where. And as you can see here, rotation downwards below 508.12. You're looking at 504.75 as your target, and then gap fill proceeding afterwards if you start breaking that, and possibly your 50-day moving average being your bounce point / target to get out if you're short, looking at that short opportunity or looking to where to buy. That's pretty much going to be it. We're going to be in a stagnation holding pattern until we get Powell is going to be my expectation. However, my expectation could get thrown straight out of the market. Make sure you guys pay attention to the levels, do your due diligence on it, and know what's happening in the market as it's evolving. So jumping to the NASDAQ, right? Similar story here, however, a little more clear. We have a level of rotation right at our closing price on the NASDAQ, 433.65. So really, we do not want to see a red NASDAQ on open. We want to see basically a rotation bullish on the NASDAQ and how that is setting up 432.74 would be a new weekly lower low, and that's we would be establishing a trend of lower lows and lower highs. So we really need to basically go green on Monday, green on Tuesday, and kind of be sitting around above 440 going into Powell. That would give me confidence for the potential run to the upside. If we don't have that, then the market's going to be more fearful, and you have to especially be more cautious then, because any which way that Powell basically blinks the wrong way, says the wrong word, could send the market lower. And how low can we go? Well, number one, you got a gap fill all the way down to 425. That would break the 50-day moving average if you got the complete gap fill. If you break the complete gap fill and come down to that level, well, you got your angle of ascent probably sitting around the 413 point. If we look here, this previous angle of ascent that we had targeting around 422. That would be a pretty massive move and a long support. However, if that didn't hold, well, your 200-day moving average is sitting at $386. That would be a pretty massive move. Would that put us in correction or bearish market territory? So let's see. From recent all-time highs, the moving average is 13%. So you're looking at a possible 10% correction. So that's what the current fear side is, right? A correction in the market, 10% standard correction, 5 to 10, is what you're looking at if you start breaking down through support. If you do that, you got to be prepared, because that is some time that we get some news, especially with how this latest news set up going into the FOMC, and we're in the blackout period, so they can't really tell you anything. However, if we do not get that rotation below 433.65, 439 or 440 is really your bullish point in this rotation. That's the complete gap fill, and then rotating up to 445.61 and then breaking 448.64 for blue sky breakout and a continuation of the run. At that point, which you need to be looking at bullish trades versus bearish trades. Now, I'm not saying you can't take bearish trades up here. However, if you're looking to swing trade it, I'd definitely be looking more on the bullish side, or even intraday trading bullish side. That'd be more momentum. That would be the momentum move. However, how you trade is your own doing. So IWM, let's just quickly jump over to that. Well, you got a very bearish pattern here. You got a weekly breakdown close. However, you did not close near the low of your week. So you pretty much have a massive range on the Russell that you got to pay attention to. 225, again, that 50-day moving average possibly coming back into play. Russell not looking too healthy, especially with some of the regional banks and everything going on. It's kind of been stagnant. However, it was only green index on the day. However, it did sell off pretty massively prior. So again, tomato there of how things are going to play out. Now, some of the warning things that I want to share with you guys. Well, first of all, let's just jump over to yields. Yields have been on an absolute tear. And again, this is that classical bull flag pattern on the 30. So the yields can still go up. We still could get Powell to kick the can down the road one more time. Yields kind of spike up to 4.6% on the 30-year. That would be a pretty nice move. That will give you that maybe that correction wave in the S&P. And then you rotate back down. That doesn't necessarily mean that this pattern's invalidated. If you get above 4.6% on the yield, yeah, then the pattern is starting to get invalidated. The 20 as well as the 10 all have this pattern. Once you come up to this upper channel, that's when the pattern starts to get possibly murky and invalidated. Let's take a look at the 2-year as always, coming up and starting to be bullish, really forming possibly that like cup and handle right here, which would be pretty bearish for the market. So again, it hasn't played out yet. We have to get above a 4.753% on the yield on the 2-year, but that would indicate that the Fed is not done. It's going to hold rates for longer, and we may get that on Wednesday. So make sure you guys pay attention to that. TLT, well, this does not look good, right? This kind of looks like a massive inverted head and shoulders that broke down. Now you're forming maybe just a downwards trend right here, a simple wedge right here, looking to possibly break it around that 92. So again, everything comes down to the FOMC, and we'll talk more about that in the discussion part of the video. However, I do want to hit up VIX and the dollar real quick. So as we can see here, VIX has basically based out. It has come very close to $14 and stabilizing around here. So this is showing strength in VIX. Why? does that mean anything? Well, strength in VIX means that the market has the potential to go down, depending what Powell is. People are not being necessarily complacent. However, they are being cautious right now. And we can see that through the dollar, right? The dollar kind of still holding, possibly that inverted head and shoulders right here formed right here. But again, we don't really like the pattern because it basically could be another head and shoulders right here forming. So again, you got to be cautious with that one. But some of the things, like everything's setting up, dollar looking at a golden cross again here. So we got a lot of news on Wednesday. I keep going back to that. And last but not least, let's just look at HSI. So the Chinese market has been in a dominant uptrend right here, which means that we could definitely continue this, especially if Nikkei and China both are bullish. But again, if Powell comes out and gives you a very horrendous statement, all this is most likely going to rotate lower unless the market basically decides otherwise. And again, oil showing strength around here, which is going to be bad for inflation, as we saw with the report. The report actually shocked me of how low oil came out. So again, we have to see how that goes. So we're going to talk about that and more. However, Fatal is going to give you guys biggest winners and losers first, and then we'll be back for the fun discussion.
This week, the market was just absolutely insane. Not only did we have CPI where we saw a decent jump when it came to the overall markets. However, the following day, PPI came out, which completely tumbled it, ending the 5-day on 0.09%, essentially flat. And on the 1 day, as of Friday, this thing actually fell a decent amount, 0.65%, where the S&P 500 ended at 5,116 points. Looking at the earnings for March 18th, 2024, we can see that there really isn't much here anymore. I mean, earnings season is essentially done. On Monday, there really isn't anything to look at. On Tuesday, we got also nothing as well. There really isn't much of anything here. Wednesday, though, we got companies like Micron, General Mills, and Chewy, and Ollie's, which may be ones that we can cover. But also Wednesday, we have none other than the FOMC meeting. And Thursday, we got the likes of Nike as well as FedEx, which FedEx is one that does tend to say a lot on the overall health of the consumer. So this will be very, very interesting. And of course, nothing on Friday. But guys, basically, earnings season is coming to an end for Q4, being shown in Q1, and pretty soon we're going to start seeing Q1 earnings, and that one's going to be an interesting one to say the least. Taking a look at now the S&P 500 heat map, we can see that things are starting to turn, especially in the semiconductors industry as well as the technology sector overall. So let's jump into this. Worst performer in this whole entire sector would be none other than the company JBL Jeppel Inc. I guess that's how you say that, losing 18.6%. But take a look at this, guys. We got Adobe falling massively after their earnings, falling almost 10.75%. We got Broadcom falling 5.6%, AMD falling 6.87%, and so on and so on and so on. Nvidia, though, is still leading a little bit strong, at least is the one resisting all of the crash in this whole entire industry by gaining 0.35 on the week performance. The communications services, we can tell that is essentially just Google and Meta at this point. There really isn't much of anything else here happening. You guys can see here that the worst performer was, well, Meta, and losing, and it lost 4.34%. And the best performer was Google, gaining 4.31%. So pretty much opposites of each other. The consumer defensives is also looking very, very mixed, though they are a lot more green than they are red. Overall worst performer, it is the company Dollar Tree, losing an astounding 13.9%. Probably has something to do with their earnings, probably bad guidance if I had to guess. However, best performer though, it is, speaking of bad guidance, it is the company ADM, because they just went through a lawsuit. In fact, I recently made a video. I'll pop it up right here if you guys want to check that out. Recently made a video about them, and well, they're up now 8.21% because they're essentially putting out guidance that shows that the lawsuits aren't really going to do much, and the loss of revenue from that nutritional segment of their business that had the lawsuit isn't really going to impact them much. The healthcare sector, it is an absolute, I guess, bloodbath, no pun intended, even though that's kind of dark. Overall, the worst performer, it is none other than the company Insulet Corporation, losing 7.64%. But the best performer, guys, it is the company West Pharmaceutical Services, gaining almost 8%. But you guys can see there's a whole lot of red here. UNH, though, is back up to $490. It went up around 3% as of last week. Even though the bank term lending program has completed, we can see that, well, we haven't seen much of anything occurring when it comes to the financial sector. Now, the regional banks, though, that is kind of, well, is massively in the red, and we can see that Zion's is an A. Why is Zion Bank Corporation an A? That's a little bit concerning. Definitely something I need to look into. Worst performer, it's actually in this sector, guys. It is, or sorry, in this industry, and it is the company Truist Financial Corporation, losing 6.9%, almost 7%. Guys, I think that something is going to happen massively, especially once we start looking into Q1, especially Q2 when it comes to the overall banks. I mean, the first things that we're going to see when it comes to the Q1 earnings will be the banks, right? There'll be JP Morgan, Bank of America, Wells Fargo, and Citi, basically the big four banks originally. So it's going to be absolutely massive, and it could swing everything to the downside very, very quickly. Overall, though, best performer in this whole entire sector, it is none other than the company EG, gaining 6.84%. The consumer cyclicals, it is, well, man, it's a little bit 50-50. Definitely, well, it's kind of easy to tell which one was the worst performer. I was thinking it was Tesla, but no, it is not. It is the company Caesars Entertainment, losing 7.03%. And actually, my bad, guys, I am so sorry. It's actually the company VFC Corp, losing 8.2%. As you guys can see over there. And the best performer, by the looks of it, it is the company Westrock Co., gaining 6.67%. Of course, to note, Tesla, guys, down 6.71%. Absolutely massive drop on Tesla, $163.57. Again, we have done an earnings review on this one, as well as discounted free cash flow on it. And even though it's not the 10-year one, the 5-year one told us that it's actually a good buy right now. So definitely something to look further into and to use the discounted free cash flows to make a determination on Tesla. The industrial sector is mainly in the, well, actually, I would say it's 50-50. Overall, the worst performer, it is the company, well, Southwest Airlines, losing an astounding 17.25%. But also, guys, Boeing is absolutely getting nuked. Everything regarding their planes, things are getting more and more unsafe with them, which is a little bit concerning, seeing that, you know, airplanes, it's the one industry you want it to be really, really safe. So this is very, very concerning, and their stock is dropping. We'll see how they continue, but yeah, overall, though, worst performer is the company Southwest Airlines, which is ironically enough still part of the same, I guess, pseudo industry. And the best performer, it is the company 3M, gaining an astounding 11.82%. The real estate sector is an absolute bloodbath right now. As you guys can see, most of the REIT specialty are, actually not most, all of them are deeply in the red, and there's only one green one in this whole, there's only one green one in this whole entire sector. That's kind of crazy. That's insane, actually. Overall, though, worst performer, it is none other than the company Extra Space Storage, losing 7.5%. And the best performer, it's the only one that gained, it is the company Coaster Group, getting 10.53%. And of course, you got to take a look at Realty Income, because they are at $52.19. You guys can still buy them at a pretty good valuation, and of course, with a really high dividend yield as well. The utility sector is also one that may be a good buy right now. They also added two new, they even added more new categories. We got regulated gas as well here. Overall, though, worst performer, it is the company AES, losing 7.63%, now down to $15 and a penny. Wow. And the best performer, by the looks of it, guys, it is none other than the company NRG, gaining, you guys can't really see that, but they did gain 5.27% to a current price of $63.93. And of course, if you guys have seen the gas prices, oil is through the roof right now, and this is all in the green, all except for 3 companies. That's crazy. Overall, though, worst performer, it is the company EQT, losing 10.9%. Everything else is massively, massively in the green. Best performer, though, it is the company Valero, gaining almost 9.5%. And lastly, the basic materials. We can see over here that the worst performer, actually, is only 3 ones. Well, there's a few of them that did lose a little bit. However, the worst performer was the company PPG, losing 2.04%. And the best performer, wow, was the company Freeport-McMoRan, gaining an astounding 12%. So all in all, this was the S&P 500 for the week, and I guess we'll see what happens, guys. There's a lot of stuff that's going to happen. FOMC, it is of course Wednesday, which we are going to live stream, and I'm going to tell you guys the new live stream schedule right here, and I'll also mention it towards the end of the video. We're going to start live streaming, guys, on a weekly basis, Tuesday and Thursdays guaranteed. If we have something in between, like for example this week where we do have FOMC, we're also going to cover it on Wednesday as well. So you're going to get 3 streams this week. So just FYI, this is going to be the new thing, and it'll be dualed for both YouTube as well as Rumble. So that's pretty much all I got for you guys in this segment. Take it away, Mike.
So I think it's natural to start off with, what on earth is Jay Powell going to say?
I think we're going to get the exact same thing that they've been saying, where they're going to be data dependent, and they're going to pause interest rates for what, like they're going to keep it the same basically.
Yes.
For another month.
But here's the problem with that statement. You get an SEP this meeting. So it's not going to give you just the projection for the next month. It's going to give you what their thoughts are at the moment for the foreseeable future.
The overall, right? Because we do get the dot plot.
Yeah.
That's what you just said, right? Yeah.
We're going to get the dot plot. So that means it's not only...
But the dot plot doesn't matter, though. The dot plot doesn't matter.
Yes, we all know Jerome Powell threw the dot plot out and basically said it doesn't matter. But again, the market's looking to grasp to something right now, especially with the way it's going. They want some assurances. And I don't think the SEP is going to give them any assurances. I think it's going to confuse them more than it gives them more assurances. And I think they're going to see possibly maybe a rate cut drop off, right? Because if they're seeing inflation stagnate and basically the numbers go like sideways, then how does that all play out?
Right. Actually, the numbers aren't just going sideways; they're also slightly increasing on the base CPI, right? On the non-core. So that one is obviously, I know they don't look at that, but I'm just saying. And right now, I'm looking at the CME tool, and they're currently projecting a 98% of rates staying the same for the one that's happening on the 20th.
Yeah, but the CME tool has become
hang on. I know. But and for May, we're still at 93.6% of rates still staying the same. Is the June one. So what I'm trying to get at is, depending on what we get for the 20th of March, the June one may actually change a lot, right? They may kick the can down the road, as we've been constantly saying, or they may even now push it from June to like September or November.
Yeah,
which would land... Which, hang on a minute, which would land perfectly with that of the election in November 7th. Because I think the election is around that same time frame, too.
Yeah, but their FOMC is post-election, so it would actually have to be in the September meeting.
Got you.
So but here's the thing. Okay, so May, so if they don't see progress on inflation... Again, their whole thing is to go back to 2%. So if you don't see inflation on a trajectory to 2% by, let's see, September would be the August report, right? So you have April, May, June, July, August. So you're going to have 5 CPI reports, 5 bullets to essentially shoot yourself with. Because if it ticks up for 2, stays flat for another 2, that's not going to give them confidence in any way, shape, or form that inflation's on a trajectory down lower.
Actually, you don't even have to say that. They don't even have to... It doesn't even need to go up. It just needs to stay stagnant for the whole entire time, and that's good enough for them to say the same. However, we did see that Powell is now saying that the target is no longer 2%, but at least it's heading towards 2%.
Yeah, but he's flip-flopped on that a couple times. He has. When asked directly, would the Fed consider a non-2% target, right? The end goal, right? How you get there, bumpy road in between, right?
Right.
He unequivocally said, no, the 2% is the line in the sand. Same when, like, inflation doesn't exist. But...
Right.
Again,
it's transitory.
Yes, but we're going back to inflation basically being the 2% is the line in the sand, and therefore, why on earth are we going to see anything else?
Right. I don't know. They may just switch the goalposts a little bit here, and then just say we're going to cut now because we've had plenty of data already. I'm just playing devil's advocate, right? But I'm saying. They could easily just say 2% is no longer the target. It is now 3%, which would essentially put us there, right? Not on the core, but on the normal.
Yeah,
basically what I'm trying to say.
I don't know how that would come over politically.
Yeah, politically that would be awful. You're
But that would be
right
political suicide, because everyone would look at the administration and be like, have you lost your mind? And basically, what on earth are you doing?
Yeah. Yeah, it's just like at that point. Well, actually, no. At that point, I'm going to have to fight back a little bit on that. At that point, it will rip the veil of the Fed not being quote unquote federal, right? Because the Federal Reserve Bank, it's not federal, it's not a reserve, and it's not a bank, right? But if they were to increase the overall target from 2 to 3, it would look political at that point. Does that make sense?
Yeah, it would look like you're calling to the administration that is your quote unquote boss and doing their bidding. But really, at that point, Congress would basically sweep the Fed under a treasury and basically be like, get rid of the Fed. Like,
which
there's no
in reality,
point.
by the way, we all know that the Fed is political, right? There's nothing that isn't political. Even the courts are political, But at least they're trying to. I mean, I remember Jerome Powell even coming out,
giving appearances of not being political.
Right. I remember Jerome Powell was one, and this was like a few weeks ago or a few months ago. He was asked, "Does he worry about him keeping his job, knowing that there's an election?" And he straight up said, "That's not what I worry about. My worry is the 2 mandates of unemployment and maximum job, availability." And inflation, right? So he was already asked that. We all know, though, that he does care, right? We all know that he does care. So, yeah, but I think that if they were to do that, which I don't think it will, if that happens, then forget about it, right? The Fed's an absolute, Fed is an absolute joke right now.
But at that point, what does the bond market do? The bond market implodes because the banks are all looking like, wait, so 3% is going to be the norm, and the new norm is going to be this high interest rate? What the, you know what? And
it's like, does that open the gate? Does that open the overall gate for them to increase the overall inflation target in the future too?
Well, yeah, but the problem is at that point, Moody's, Finch, all of them would come out and say, we have no hope of you being a high-rated bond because, like, your ability to pay, if you move the goalposts, it doesn't change your obligations to your debtors. So now you're going to put at risk the government's ability to pay back those loans. And speaking of that, reverse repo kind of sitting around that 400 mark, actually making a new low. So 413 versus 439. So again, every time it goes this sideways action, it makes a new low. So it's taking its time coming down there, but it's going to definitely be interesting.
I should really repost this on X because I haven't done it in a while. So I should probably do that today. But yeah, reverse repo is coming down. And the last thing would just be the overall fear and greed, right?
You mean the broken index?
It's still, guys, this is exactly what I've been saying. Yes. So this past week, markets were essentially flat, right?
No, they were flat on the week, but a chop fest. Massive chop fest.
I agree. Yeah, but what I'm saying is on the week that they were flat, right? They ended essentially flat. But you're absolutely right. It was an absolute chop fest. It was just gaps all over the place. But we're still stuck at that 70, high greed to low extreme greed territory. It's still broken. Even though we've had volatility where, on Friday the thing fell, and even Thursday it fell as well. It's still stuck there, guys. It's still stuck there. So, anything else you want to say on that? Or
no, I honestly think at this point the market is pivoting a little bit to maybe taking some money from the bulls versus the bears. However, net speculative positions, which I did forget to go over, went right back to exactly where they were. They went from 239 to 204 back to 239. So I'm like, okay, both teams kind of sticking their head in the ground and basically just playing the dodo. So,
well, okay, just basically playing the dodo, going extinct.
Yeah, pretty much.
If you go back to the fear and greed, though, I noticed something. We actually do have before. If you take a look at the right of the needle, you see greed, extreme greed, and now extreme fear. No, to the right.
Okay.
To the right, the other right.
Here.
There we go. Yeah. So we didn't see that a few weeks ago because a few weeks ago we were actually in, it was still greed. But now we're actually seeing some extreme greed. What is that, 5 years ago?
No, so it's 1 month, 1 year. So extreme greed a month ago,
No, so,
extreme fear 1 year ago.
okay, so the last one is 1 year ago.
Yeah.
Okay, got you. So yeah, a year ago we were at extreme fear at 22 points, which is really, really low. It's essentially the opposite of what we've been. So eventually the needle will swing back. But until that happens, markets only go up, right? Markets only go up. So y'all saw the heat map that I did for my part, guys, and a lot of companies are starting to waver a little bit, especially that in the semiconductor sector. So I think those are pretty much going to end it here. Again, this week we're going to have a live stream on Tuesday, Wednesday, and Thursday. As I said, we were going to have permanently 2 live streams per week, Tuesday and Thursday. However, because of the FOMC, we'll cover the FOMC. The good thing is that it's not going to be 2 hours like before. It will be however long we need it to cover everything that we need to cover. So yeah, it'll be on both YouTube and Rumble. So we can finally start doing that again. And yeah, guys, that pretty much does it. Make sure to like, subscribe, comment. Really does help here with the algorithm on YouTube as well as Rumble. Make sure to follow us on X. And again, live streams will be Tuesday, Wednesday, and Thursday this upcoming week, 7 p.m. Eastern. All right. So thank you so much for watching. Peace out. And we will see you all next time.